My name's Tom Howard. I am a cannabis lawyer. You can go to my blog, cannabisindustrylawyer.com, and that's where you'll find me. And probably have also came by a lot of my stuff, my website, cannabisindustrylawyer.com, and then my law and consulting firm, Collateral Base. So we do a lot of business plans, which leads into valuations and capital structuring for cannabis companies. And actually, one of the things we're going to talk about at the end of this has to do with some news that just came out yesterday that illustrates exactly what we're going to be talking about once we get the presentation started. And it really is kind of called like hedge funds in your cannabis company, or should your cannabis company organize itself like a hedge fund? I'm not saying, here's how, but these are some of the questions that you may want to have when you're organizing your cannabis company, so you can capitalize it in a way that may take advantage of limited partnerships. So I'm going to share my screen and we can get started on the slide deck. Slide deck's not all that large for the ones that we've had to cover. Sometimes we do these on various states. The next state aspect that we'll be doing is soon Massachusetts delivery operator licenses, followed by Virginia, followed by New York. So go to Cannabis Legalization News on YouTube, subscribe there. And that's where you can get notice of all of these webinars that are coming. And of course, these webinars will be recorded and then posted on YouTube and for 24 hours on Cannabis Legalization News. Then they become members only. All right. Again, I think we've already kind of gone over this. This is I'm no longer a stockbroker, and this is not financial nor legal advice. This is merely information. I think we've covered our bases there. If you need anything, email me at tom@collateralbase.com. If you forget that, it's tom@collateralbase.com. To remember which one's over my shoulder. So we're going to do Q&A at 15 to the hour. I think I have enough content to be able to get us there, especially with the two exhibits beyond this slide deck that we have to talk about. Now, we will first be covering what is a hedge fund. We'll get into how can it benefit my cannabis business, where can I find my limited partners, and how do I pay my investors like a hedge fund does. So we're going to kind of cover those few things. But first, let's really talk about, well, what is a hedge fund? What do I mean by that? I thought it would have gotten more signups for this webinar, but I guess many people are just like, hedge funds, who cares? So we're going to go over some background of some hedge funds. Now, they didn't really exist until about 100 years ago. They take advantage of market mispricings. And so the original one wasn't actually called a hedge fund. It was a hedge fund before the term was coined. And that was the Graham-Newman Partnership. That is Benjamin Graham investor fame. If you guys like stocks and if you like fundamental analysis of those stocks, buying stocks like Warren Buffett would, who's that guy with the one investor rule? He's on YouTube still. I can't remember his name right now. Where you're looking for Mr. Market, which was a phrase that Benjamin Graham actually popularized with his investment strategies. You're waiting for Mr. Market to give you the price that's wrong, and then you would buy that. Now, Ed Thorpe, well, actually, we can talk about the hedged fund. So a hedge fund as a term came up in 1949, where a hedged meant one that manages market risk. What do I mean by that? You would adopt strategies where you don't necessarily care in which direction the market goes. That was popularized by Ed Thorpe. Ed Thorpe wrote a book that the gamblers all know called Beat the Dealer. And then after he beat blackjack, he looked at the stock market and he actually came up with a discovery for the Black-Scholes algorithm that is used to price options. He came up with it about the same time. And then because the people that had read his book, Beat the Dealer, were also math nerds, and they came up with the options pricing algorithm out of Chicago in the early 70s. They sent him their book, and he's like, oh, well, at least we have this tool to, exploit the options exchange that came out of Chicago. I realize that this is kind of dry financial history, but I like it. And then there's some other hedge funds that are out there. For example, Bridgewater Associates. That one is the largest hedge fund. That one's done by Ray Dalio. They have billions of dollars under management. Now, Ed Thorpe's Princeton Newport partnership was eventually closed down by Rudy Giuliani. actually, which is annoying because Rudy Giuliani didn't close down Bernie Madoff. But Ed Thorpe did look at Bernie Madoff's proposed split strike strategy in 1991 and said, ugh, this is clearly fraud. And so Ed Thorpe was one of those, what I would consider like hedge fund managers that is trying to be what they call delta neutral, market neutral, really just taking advantage of what Benjamin Graham noticed decades before, market mispricings. Now, as opposed to like what Warren Buffett would do with those market mispricings, buy low, sell high, try to find a position that he can enter for Berkshire Hathaway because the market has beaten that asset down and it actually is under book value or it's got reasons why it's going to grow. Just straight, upside version of that. Some people are more along the lines of, well, I don't know if it's going to go up or down, and I don't really care. And so I just know that it's mispriced. And Ed Thorpe would use that by buying warrants very often. And so he was in the futures, well, he was in the options markets before there were options markets to try to leverage his risk. So he'd have a neutral position. And then, of course, one of those market mispricings would occur, and then they'd be able to exit the trade for a profit. Now, what do I mean by exit the trade for a profit? Well, all the people we've been talking about so far are the general partners of the limited partnership. They are not the limited partners because, Ed Thorpe and Ray Dalio and Bernie Madoff, who, by the way, he also ran a hedge fund. His was a scam. So, they just don't have to be dabbling in equities is what I'm trying to say. The thing that we're really trying to talk about today is, should you structure your cannabis company as if it is a general and limited partnership? So you would have these experts. These would be your general partners. These would be your Ed Thorpes, your Ray Dalios, your Benjamin Grahams. These experts of this particular asset class that are managing it for the benefit of limited investors who have put in their money and risked that limited investment. That is their risk. If you put $1 million in, you can lose that $1 million. Now, the general partners, they have what they call unlimited risks. They are actually managing the asset portfolio that they've used to create from the limited partners' money. Limited partners are the ones that are just in it for the return. They're super stoked if you can give them a 20% IRR return, or that's like a complete return every year. In fact, that would be ridiculous. That would be unheard of ridiculous. For example, I think Bridgewater Associates is Pure Alpha product, the one that is one of their best selling fund packages that they have, has an annualized return of 12% for the past 20 years, which is obscene. It is, but it's not 12, it's not 20%. So what you can do with a cannabis company is you can organize it as if it is a limited partnership in which your limited partners would have the opportunity to enjoy an alternative asset as opposed to stocks and bonds, which would be able to provide it with a steady recurrent stream of profits year over year. Now, you might not be able to take advantage of compound interest with those profits simply because cannabis companies have difficulties in scaling. But if those profits are at least distributed to those limited partners, then they could take that 20% a year and invest it in just a general index fund like the SPY or the QQQs if you're into the NASDAQ. You see, corporations, maybe like a Berkshire Hathaway or a Google, they might try to achieve this similar limited partner status by having different classes of shares. So in Berkshire Hathaway, they have different classes of shares so that Warren Buffett can really call the shots as to what the investors and the investment committee are going to be buying and selling for that year. What assets do they believe are mispriced and will, increase in value. And so it's same with Google, where you have the management of Google and they have a particular class of shares, which has substantially more voting rights than your regular common stock. So basically, a limited investor is someone who has very little say in the day-to-day business operations. And that effectively is what a hedge fund is, but not necessarily. When people think of hedge funds, they think of stocks and bonds. So let's go over a few of the types of these hedge funds, for example. Equities, again, these are the most common. These are stocks and bonds. They can be pretty complex with equity options and warrants. There's a difference between an option and a warrant. A warrant comes from the issuing company itself for its own stock. An option is usually made by, it's written by a market maker in a pit somewhere, a third party that's running the options pit for that particular equity and creating a market of derivatives. And then if that wasn't complex enough, then they take that and they get quantitative. And so now you're going to use mathematical models and patterns in which to create trades. The most popular one of this, it's quite old now. It was from 1997, 98, and that's eventually when it exploded. That was called long-term capital management, acronym popularly known as LTCM. The people that actually invented the options pricing model were members or general partners in that, and I guess chutzpah would, or hubris would be the downfall word on it. It was sweeping up pennies and creating dollars, and then it had exposure to devaluation from I think Germany, not Germany. It was Russia. It was back in the late 90s, and Russia defaulted in all this debt, and it blew up this long-term capital management fund, and then eventually somebody had to come in and bail it out. Then there's a fund of funds, and that's kind of like a house of brands, let's say. So you would have a fund manager, and then they would have limited partners. And then those fund managers would go out and they would buy and sell different funds and or companies. So they would have that asset that they're managing for the benefit of their limited partnerships. Then there's distressed assets. And so distressed assets, these would be in the secondary note markets, I guess. After loans failed to perform, they go into what they call a special assets. And then they are very often sold for large discounts to other companies that are like turnaround firms, kind of. And so they buy this debt for pennies on the dollar, and they try to squeeze dollars out of it. So that's another type of fund that's out there. Now, are they all hedge funds? Well, kind of. They're all limited partnerships that have preferred shares that are getting paid first. They don't have very much say. Now, how can we manage cannabis assets? So how can you apply that concept to your cannabis license? That's really the meat and potatoes of this webinar today. So let's talk about the different types of assets that your cannabis company has. It's licenses. That's an asset, or assets if you're vertically integrated, because you've probably had to stack several licenses. Your branding. That is an asset, especially if you have a hot brand like Cookies or a hot strain like Mac. Something that is known beyond your jurisdiction. That could be a wonderful asset. Talent for cultivation and or other skills. That's an asset. You know, you can have a management company for cultivation. You could have a service contract to set up a new operator's menu and to explain to them how to grow flower excellently. Not only that, you could also then have staffing issues. And so you have to be able to staff a lot of these companies according to the rules that the license holders are operating under. Having an ecosystem, or, you know, because like, for example, Canna Advisors has underneath it H2. And H2 is its staffing firm, because as it was operating and getting various applicants' licenses over the past 10 years, oh, they had to get them employees now too. So it's just another LLC type asset that you could be managing under this cannabis hedge fund, if you will. There's your IP assets. Well, I skipped over real estate. I shouldn't do that. Real estate's huge in the cannabis industry. Real estate is a way to avoid tax liability and capitalize things and create what they call tier 2 MRBs, as opposed to the license holder, which is actually the tier 1 MRB. That's the one that has the most difficulty in obtaining the bank account. Your tier 2s, then you can try to avoid that IRC 280E obligations, but also access bank accounts, because you're not in the business of trafficking or cultivating a Schedule I substance called marijuana. No, you're a landlord who rents to somebody who is trafficking or cultivating in marijuana. And so that's a difference. Then there's your IP assets. I mean, imagine if you have genetics. Imagine if you have that trademark, you know, that wonderful brand like a Cookies or whatever your brand is, as it has grown from one state to another state and has attracted a loyal following of fans. Of course, then there's also cash flows. Accounts are always an asset. And so how you could manage those accounts might be Well, it's very often it's useful for secured transactions. And then we can talk about the capital stack of your cannabis company in another slide. But I just wanted you to understand that when you're thinking about your cannabis company, it's just not one asset. It is a basket of assets and related ancillary cash flows that are necessary to operate your company. And therefore, if you have the right investment team that is managing the acquisition and disposal of all these assets, you may be able to put together a pretty cool limited partnership that would be able to raise funds, acquire targets, liquidate those targets, and then create alpha for the limited partners. And I don't like using the term alpha. I like dollars and cents. Create a return, create a profit for your limited partners. I don't really need to switch out between here and what Illinois provided. This is a chart of a dispensary as provided by the state of Illinois when they started taking their applications for dispensary licenses in the fall of 2019. I believe that this was not well understood by many of the applicants, not probably even paid attention to by many of the applicants. Now, that is because most people would just look at that circle in the bottom, the license E LLC, and that's where their understanding would just stop. And it's not because, it's only because nobody taught them all this stuff. You know, it's not because of anything else other than somebody should have sat them down and like said, all right, well, let's talk about how these cash flows move. Your licensee LLC is going to be the one that actually has the license to cultivate and or to sell the cannabis or transport or whatever license activity there is. That is going to be the most exclusive, difficult, hard to deal with license because it has the most regulation, and it also has the most equity restrictions, and it also has the most residency restrictions, and it also has the hardest time getting a bank account. Now, that licensee LLC might have contracts with a holding company for rent for its facility. Now, depending on how that's finagled between the licensee LLC and the holding LLC may have capitalized the entire FF&E, fixtures, furniture, fixtures, and equipment of the cultivation facility to be able to offset that from the licensee LLCs. So that cash flow can then go to that holding LLC to pay for all of that equipment that was just purchased. And then that holding LLC gets the depreciations and the rent incomes. And it doesn't have to abide by that IRC 280E so much, and it can get a bank account. That's an advantageous asset to be able to have a relationship with a cannabis company for. Then you have your management LLC on the other side, and that management LLC, that might have the expertise in retail or the expertise in logistics for your transportation company, or branding for your distribution company, or cultivation for your cultivation license. And that management LLC would have a contract with the license holder itself. That's another asset, and that's outside the purview of the restrictions on the ownership for the license of the LLC, the license holding, the marijuana license holding LLC, and also outside the purview of that IRC 280E. And then up the top, you have a pass-through LLC, and the reason for that will be explained if you hit like and subscribe on Cannabis Legalization News on YouTube, and also go over to cannabisindustry.lawyer.com and fill out one of those get started forms that we have from Typeform. It's a little survey. It takes a few minutes, and then I'll explain to you how that pass-through LLC works. It has to do with the taxes. And then eventually there is a publicly traded conglomerate up there. So there's a lot of opportunity. There is a lot of opportunity for creating various different cash flows from various different assets, all related, but not specifically cannabis license. And as a result of that, you could have an asset pool that requires management. And if that asset pool requires management, that's one of those classic things for, well, sounds like a limited partnership's the thing that we really want to have, because that limited partnership will allow us to have all this these assets under management done in a very, very smart way, so that we have the highest likelihood of being profitable in this very strange, complex, overregulated, high cost of entry industry. So let's get back into the next slide. And so the next slide is here. So let's go over a cannabis hedge fund just in general. This is of course 10,000 foot aerial view down, just for informational purposes only, all that stuff. We're just talking. So a cannabis hedge fund would have a pool of limited investor money. And for that, you're really going to be trying to find these terms of art called qualified purchasers or qualified clients. It's essentially code under a particular law from 1940 for a really rich person that is able to participate in investments that allow for them to have carried interest payments. So next, you're going to have these experts, and those experts are going to be cultivators. They're going to be retail operators. They're going to be brand managers. They're going to be people that are great with distribution, technology. Those experts are going to manage the fund assets, and they're going to be called the investment committee. They may also be your general partners. Now, your limited partners are going to get the preferred shares. They're going to get preference when it comes to distribution of profits. And so those get the first profits. Typically in many funds, you might see a pref of 8%. After that, then there's what they call the catch up for the general partners to get their share of the profits as well. So the limited partners would get 8% pref on a pro rata basis based on how many people you've actually sold to. And then you would have a 3% catch up. That would, of course, be general to the general partners, a different pro rata distribution depending on how many of those have. And then you get into your carried interest split up to a maximal amount. Now, why would this be more advantageous than maybe like a cultivator? Because a cultivator is trying to grow a pound of weed for approximately $400, let's say. And then he's trying to sell that pound of weed, ideally, for retail prices of $60 an eighth, which would be approximately $8,000, a little bit less a pound, which would be nice, 400 to 8,000. But if you could do the wholesale model, then you usually are 50% of the retail. And so the retail...
I'm having trouble hearing you.
So we were explaining carried interest quite briefly. And then that's when your limited partners would end up with their maximum return. And so after that, there'd be a split of the carried interest up to, let's say, 20% profits. And so if you're selling the weed at $8,000 a pound, that may cost you $400 or $500 a pound to make. Nice. You have a lot of potential profit margin in which to then carve out 20% of that to a limited pool of investors based on a fixed amount of investment. Now, you're also going to need fund administrators because this clearly is going to be complex. Like the contract stack to set this up and form this is ridiculous. And we're going to, at the end of this, before we take questions here in about another 15 minutes, it was so ridiculous. Like I was making these slides and stuff yesterday, and then I read, I read this article. And so this article is essentially about what we're talking about specifically. And so we're going to actually have an illustration after we've finished with the slides here in about 10 minutes. So stick around. There is an illustration of this exact same thing that's currently happening in the industry right now. A fund administrator very often is going to be like a lawyer, a regulatory lawyer, a corporate lawyer, somebody who's good with the paperwork. They have a lot of automations for fund administrators now, but you need somebody to make sure that you are compliant because you're talking about stacking compliant industries. You're in finance, which is, you're raising money, which is a very highly regulated industry on top of the cannabis industry, which is a very highly regulated industry. You put them together, explosive profits, right? No way. And so that's the other thing. The last point there on this is it a hedge fund or is this just a limited partnership? Well, hedge means managing risk. And so weed sells itself. So of course it's a hedge fund because a hedge fund that is involved in the weed industry effectively has no market risk because it sells itself. Sure, let's go with that. I wouldn't put that in your pro formas, not your pro formas, your prospectus if you're selling shares, or in your PPMs if you're just doing a capital raise. Now let's talk about your investment committee. Your investment committee reflects the understanding that cannabis is an ecosystem of various entrepreneurs. The licenses are quite often not vertically organized in very limited market states, which, by the way, are un-American, and they are, monopolies that we create. And this isn't Russia. There's no oligarch that has control of the weed industry. There's no oligarch that has control of the oil industry. This is America. And so eventually there's going to be a lot more licenses, and there may be restrictions on who may own what. For example, the alcohol industry was regulated under the 3-tier thing. And so that was manufacturing, distribution, and retail. And so we're seeing manufacturing, distribution, and retail very often in California. You see a complete separation of cultivation from retail in Washington State. They have similar stuff in Virginia and in New Jersey. If you want to go vertical, you're going to have to stack licenses, and you still might not be able to go vertical. So you're operating in an ecosystem of licensed operators. You got to get to know one another. It's one of the reasons why whenever a state legalizes, the first thing that somebody does is a corporate lawyer starts an association for the businesses, and they say that they are putting together a board, because effectively there's just a lot of organization and corporatization that comes with a highly regulated non-vertically integrated industry structure. So, you have this ecosystem of retail operators, extraction, cultivation, distribution, and that's who goes into this investment committee. It's a committee of cannabis professionals looking to expand your funds holdings, your asset portfolios, to maximize profits. And then if you do that and you do it well, that can open up that offering to additional limited partners. And then you could have another funding round, and then take new clients. And then, of course, you would review and manage the assets that are under those operations. And so that investment committee would look at, okay, we're gonna get this type of extraction facility with these types of specs in this particular location. Your distribution member of your investment committee would provide you with knowledge and insight as to why you should invest in, or why you should use or participate in what type of distribution technology. Same for your cultivator. All those things would come together to create your hedge fund's asset portfolio. Now, this local control risk, this is different. Like, this is a little different. Like anybody can buy stocks and options and bonds, right? Especially in the day of the Robinhood apps, where you can have GameStop, just volatile markets, because everybody can hit the same buy button at the same time. Now, this is different in cannabis, because the cannabis license, that LLC with the license attached to it, that's going to have ownership restrictions for social equity. That's going to have ownership restrictions for local owners or veteran owners. That is going to be a very highly non-fungible good. It's got a fungible good called weed that it sells, but that license itself, you have to be the right combination of people to be even in the ballpark to obtain that license. So I think that this means that you're going to have a lot of acquisition issues. You're going to be buying and selling these assets, or like investing or pulling out of investment from a lot of these assets to benefit your limited partners. This is a wrinkle on this aspect that you don't necessarily see. You see, most of the assets under the management of this hedge fund for cannabis would be, cash. And so, like, if it had the ability to put the minority ownership in for the cash and funding for these local license holders that are very often going to be social equity or Illinois residents, or whatever state we're talking about residents, then the larger fund can invest their cash and then also bring with it certain brand IP, certain ability to create a high quality flower, or to be able to operate, or to be able to do the distribution. And those might be other IP licensing contracts. Super frickin' simple. So again, I think it's going to be difficult for startups for these various reasons. First, many applications are becoming a lot like lottery tickets. What do I mean by that? There will be more applications than there are available licenses. And the only way to really avoid a lot of litigation is to make that a fairly random allocation of the qualified applicants. So you first do the scoring, you see how many applicants are qualified, and then you hold a lottery. This happens in Arizona, this happens in Ohio, this happens in Illinois. So it would be difficult for you to really create a hedge fund style with limited partnerships if it's not a sure thing. That's why I think it's going to be a lot of the licenses will be awarded, and then the hedge funds will be like, how you doing? Would you like some of our money? And then, of course, there's also the social equity restrictions, which makes it very, very difficult to obtain the actual plant touching LLC license. And it doesn't have to be an LLC, but just the plant touching license itself. Also with the residency restrictions. And then there's the political ties. The bribery in the industry is not supposed to happen. And so you may want to always be recording everything that happens in the industry. You might really want to have a record of that mayor asking for $50,000 if you want to be there. I'm just saying, it's Otter.ai that you could have in the background and just be recording them. You could have them on a Zoom. I could have a Loom right now on this, be screen recording this. I have this on a Zoom so I can download this. There shouldn't be bribes in the industry. Now, again, there's no established cash flows. I mean, this is speculative, you're a startup. And so that's really, you're beyond the seed capital usually. And then you're very often when you are a startup, unless you have the right partners. And so you could try to like pre-pack this if this was a bankruptcy. Sorry, I used to be a financial litigator. I'd see pre-packed bankruptcies. So you would have no established operators. So you are kind of a startup. That's why I think this is going to be more applicable for our example that we're going to be talking about here soon, because you have these different these different team members on your cannabis hedge fund. Typically, you'd only have 3 of them. You'd only have the qualified purchasers; those are the investors, the money, and you'd have somebody who's the money guy that knows all those people and manages them. Then you'd have the asset manager; those would be your experts, the people that really understand cannabis and the business thereof to be able to manage the assets of the fund. Then you have your fund administrators. These would be your bean counters and your T crosses and your I's dotters. Those be like your lawyers or your accountants to make sure that you are completely in compliance, because now it's a compliance industry on top of another compliance industry. And then, of course, you'd have your local partners, because those would be the ones that actually have the majority shareholder interest in the plant touching license itself. How to set it up? Well, we're going to talk about this a little bit, and then we're going to show you an example of it. You need a great business plan first. And so you're going to need, most lawyers that I know do not understand the stuff that I'm telling you. The ones that are in New York, the ones that are in the financial capital of the world, sure, that you have a higher likelihood of being able to find them. But this is an industry that has that intersection of a lot of capital and therefore investors, and therefore a type of lawyer that is very insular in minority. And not only that, they work in conjunction therewith with a financial evaluator. So whenever you see M&A in a very large scale, you see this, the company is represented by this law firm, and an evaluation, opinion appraisal or something was provided by this consulting firm, law firms, Jones Day, consulting firm, McKesson, for the valuation of the price of whatever the M&A is going to be. It's complex. And so like to try to find the person to be able to set this up for you for less than $150,000, good luck. And so you're going to need this great business plan that explains the limited partner structure, explains the asset management strategy, provides the executive summary of the general managers, and communicates the upside of the investors with a term sheet that allows you for the entry and perhaps a warrant kicker or something for your next capital raise. I mean, this is it doesn't get any more high finance than this. So let's now go over that because I'm going to stop sharing my screen for a bit while I pull up a different screen share. All right, before we jump into the example's right there at the bottom with that link. I can give you that link. That'll be out in the auto emailer that goes out after this. I'll send you that auto emailer and then hopefully have this sucker cut up by YouTube. But if not, it's on our email list that you've already signed up for. So you'll get notice when this has been on YouTube if you want to share it with somebody. It's Millennium Investment and Acquisition Company. So this is what, this is my understanding of the timeline for your cannabis hedge fund. So right now, if you have the big money, you could be waiting and forming this as we see what's going to happen with the social equity license that are going to be awarded first in Illinois and then all up and down the eastern seaboard and in Arizona. And now there's ones in LA. There's the cannabis licenses that are being issued are typically social equity now. So they're going to be awarded. And then you're going to have this cannabis REIT and or fund organized. Now, a REIT is a real estate investment trust. We haven't talked about that. It's fairly similar, except the asset under management is real estate. And then that management company, that investment committee is going to get together and they're going to start looking at undercapitalized license holders that might need equity infusions. Or like capital infusions. And then we'll probably get into a fancy convertible debt offering. That was that convertible note that might have like a warrant kicker on it for the next fundraising after you've hit your exit fundraising, because it's all about the valuation. That's one of the reasons why they keep raising money, because then you can have paper gains where I put in $1 million and then I have this debt converting opportunity, so that with the way that it's valued, the next time the company raises money, my $1 million might magically transform into 3 because the valuation of the company has gone up. Now, of course, this would always require regulatory approval, and we can see all of this in this article. I'm going to try to link to it. I just don't know if I think that worked. I'm not certain that it works, but I think it worked. Hopefully, it's still sharing the screen. That is the thing. And by that, I mean, this press release from Millennium Investment and Acquisition Company is a wonderful illustration of its initial foray into cannabis cultivation. So this is a company that essentially did the same type of thing that we just spent the last 40 minutes discussing. And this is out of New York, May 24th, 2021. And so it's like literally just yesterday I saw this and I'm like, oh my gosh, I got to end the webinar talking about this because it just literally happened. So they explain this investment that they're going to do, and it's pretty complex because this company was already considered an investment company under the Security Exchange Act of 1940. Now they're going to try to get out from being one of those. So it was already kind of like a hedge fund. And now it's going to be pivoting into the cannabis industry, which is really kind of interesting. So they entered into a long-term lease, which you see very often, to real estate purchased by a power REIT. And so now you have this cash flow on a cash flow. So this REIT is kind of in the cannabis industry or cannabis adjacent industry. It would be called what you call a tier 2 MRP, entering into a lease with what would eventually be some of the plant touching licenses themselves. And they're going to improve the space, and they have over 100,000 square foot of greenhouse space. So that'd be at least 50,000 square foot flowering, which is a lot of plants. And so then they start talking about their committee that's coming in. You know, this person is led by this Jared Schrader, an experienced cannabis cultivation operator with a track record. He grew Colorado revenues from a facility of 150,000 weekly to over 150,000. From annual revenue of 150,000 to weekly revenue of 150,000 in 2 years. That is a turnaround story, isn't it? And so that's kind of what they're pitching right now. It's like, you can trust our expertise on this investment company. What I did in Colorado, I'm going to do here. And then he's going to be the president. And of course, they always have presidents give statements. And so like they want to quickly establish 11,000 cannabis plants, which can be harvested approximately 5 times per year. So that's, to me, says premium indoor, a 9-week flowering cycle, try to get 5 turns a year, 1,000 cannabis plants. Now that's 1,000 cannabis plants flowering, which would be about 44,000 square foot of canopy, which makes sense considering they bought a, how many square feet was that can? 100,000. So it's usually about a 2-to-1 like that. And then they're going to actually stop being, they're going to deregister as a investment company, and then they're going to try to become a cannabis company, and then they'll be an internally managed, non-diversified, closed-end investment company is what it used to be, and now they're going to become a cannabis company, and they have a power REIT that is attached next to it, which is kind of hilarious. They do also mention how they were going to do this, and they are using the secured debt, which needs to be approved before it can become an equity interest. So right now, no change of ownership has had to happen. They've just been given a loan by the people that want to convert and become shareholders. So anyway, I just thought it was interesting that they actually have something that's like that, and that they were, oh, there it is, the triple bottom line. I did like this. This is interesting. This is kind of like an impact investments thing. You see this a lot in cannabis. I've never heard it called the triple bottom line, where it's a commitment to profit, planet, and people. Interesting. Usually it's an impact investment where it's about more than the money. So that's how they're kind of defining that they're about more than the money. I swear that I read that it said that they had funded this through a convertible debt obligation, which made sense, but no, I don't see it. There it is. They just don't use it. Okay, so I'm going to cut out a lot of that, me like searching for it in post, but you guys got to see it. And we'll get to the questions here in a second. So as part of the transaction, the 2B investment company in cannabis has agreed to lend capital to the current holder for its business operations, and the new cannabis hedge fund is in the process of obtaining regulatory approval for holding cannabis licenses in Colorado. Upon receiving such approval, it is contemplated that the current hedge fund will become the majority owner of WC in the form of preferred equity ownership stake. So they have this debt obligation that is going to be convertible upon approval from regulatory authority. And with that, I'm going to get back into there might be one slide left. Yeah, it's just me. And so I can stop sharing my screen for a bit, take some questions before we end this at the top of the hour, because I have another client call starting then. So somebody asks, I want to start and run a cannabis company, starting the delivery and scaling up to retail and other businesses underneath the dispensary. How should I form the LLC? Well, if you're going to start at that such and such level, that's one which is really difficult to answer, because there's so many different ways that that's going to evolve into the future. And it depends on how much money you're going to be making at the delivery license, to be honest, because some delivery licenses, they're like, being an Uber driver, they don't make that much money. I don't think you're going to be at risk of audited. So then you might almost be able to do that as a sole proprietor if the revenue is just not there. But then as the revenue gets there, let's say that however you do it, you parlay that sole proprietorship, and then the numbers start getting realistic. So you should be an LLC. And then and then by that, I mean, like, if you're delivery driving, maybe you need that insurance, because in theory, you could hit somebody and cause tens, if not hundreds of thousands of dollars of damage to him. So as being a delivery driver, sure, file the LLC as a single member LLC. I don't think you need to elect any type of tax treatment beyond that until like the money shows up. And then once the money shows up, then you got to elect the right type of tax status to offset the problems that can come with the audit risk. But if you're taking that delivery license and then you're spinning it into a dispensary license, you might want to have, if there are two different licenses, you probably want those to be two different LLCs. And then after that, you've seen that, like that dispensary thing from Illinois, that wasn't just one LLC. That was a cannabis conglomerate with a pass-through LLC and a side LLC and a side LLC, and then the license holder. So that was 1, 2, 3, 4, 5 different LLCs for one dispensary. Again, it depends on how you want to organize and form it. Like, let's say you're doing a delivery operator LLC or a delivery operator license. That allows you to essentially be kind of like an Amazon fulfillment center meets Uber. So you can just Uber Eats. You could just take from your inventory cannabis straight to the consumer. That license type is coming from Massachusetts. It should be really exciting, but it's going to be difficult to get, simply because a lot of people are going to want that as the cash flows on it, and then your operating costs, it's going to be more lucrative. Hopefully that answered that question, but thank you for asking it. I think there's another one. There's one from, I'm not going to necessarily read you guys' names. I'll keep some of your confidentiality. I'd like to convert a retail LLC to a cannabis retail edibles in NJ. Can I help with the application? Yes. I can help with the applications wherever you want to do them. They just become stranger in whatever type of jurisdiction you're operating, simply because they're like, one of the reasons why I think they do the competitive to pick the best applications is because that allows that blurriness to get in there. You see, that allows that fudge factor, that allows the people to be shaken down, that allows favors to be made, because it's such a complicated system, and then you have to fight City Hall if you don't like the answer. And that's one of the reasons why I prefer the Oklahoma model, where it's like, would you like a cannabis license? Here you go. Good luck. Open to anybody. Very difficult to compete then because anybody can get one. And so that's why you need a business plan all the more if you're going to try to open in Oklahoma. Because how do you distinguish yourself? How do you distinguish yourself? What is your USP? How are you going to raise that money? Why are you adequately capitalized? If you can make it in Oklahoma, you can make it anywhere. And so that's probably one of the reasons why a lot of the MSOs are not operating in Oklahoma. Where should you specifically raise capital in the cannabis space? You should raise capital from anybody who you can get it from. No, because then you're going to run afoul of a lot of things. You should raise capital in compliance with the capital raise documentation that you are using. And so there is a compliant way to raise capital. There is a compliant way to do because we were talking about securities offerings. So effectively, you don't have a stockbroker's license. Mine lapsed in like 2010. And so as a result of that, like I'm not talking about necessarily shopping these types of securities. You can't advertise for the stuff that I was talking about. It was mostly a 506B raise, and that would be something you'd still have to file a Reg D form with the SEC after you actually successfully completed that capital raise. If you need help with your capital raises, you can reach out to us at Collateral Base, and we'd be thrilled to walk you through it. But it gets complex, man. And so that's one of the reasons why we start with that business plan, because then we can talk about how much money your cannabis business needs, and then how do you go get it. And then who are you looking for? And then how do you structure it? And then once you understand your cannabis business plan and your capital stack and your investors and who has skin in the game, who has a financial interest, which the applications very often call it. Once you understand that equation of your company, the rest of the stuff on the back end, and then by that, I mean all of your operating plans and the other compliance demonstrations, they more fall into line because then you understand who gets what and what the deal is. You always have to be compliant. Your grow has to be compliant. Your transport has to be compliant. Whatever license you have to comply. And so your application is going to demonstrate that such compliance therewith. And that stuff can be expensive because the Illinois application was hundreds of pages long. And so a New York, New Jersey application, Virginia application, those could be hundreds of pages long. Yeah, we can do some work in California to help you with your cannabis applications. We can't make you, what we can't do is turn you into a social equity applicant. We could say, here's how you might want to go about finding that social equity applicant. Here's what you are looking for because you're forming a partnership with them. So nobody has to feel like they're the king of shit on this. You guys are a team. Right. And as a result of that, the person who has the money and the person who has the social equity, they have to realize they're seeing eye to eye with one another, and they both have something that without you can't have. And so that respect and that trust when they create that business is exceedingly important. How do you frame a cannabis podcast or working in entertainment within the cannabis industry? You go subscribe to Cannabis Legalization News on YouTube, or you subscribe to Cannabis Legalization at any one of your podcast providers because it's out there. And that's what I do with mine. And so I just do my cannabis podcast and my YouTube channel because I can't advertise. And not only that, I live in the middle of nowhere, guys. I live in Peoria, Illinois. And so, yeah, I know, right? Even Richard Pryor left. And so as a result of that, I had to make a cannabis podcast so I could at least reach all of you guys that are here. Yeah. And so if you are a verified social equity applicant, that's fantastic. Now, that's one of the first assets. Now, that is an asset of your company. And that's one of the reasons why I'm advocating that Illinois actually has this type of certification process, and so should your state, where if you can be certified by the state that you are that thing, that is an asset of the company that you bring to the table that nobody else has, and that needs to be valued. And then that allows, now again, the problem with that valuation is it doesn't come up to the 51%, but whatever. And so, it's going to be interesting to see. And so, yeah, if you have that, we could help you with building and raising capital. Yes. We could show you how you would organize it. We could show you what your conceivable valuation of your company is. We could therefore then tell you how you may want to structure your capital organization for raising that money. And then, of course, we can't necessarily go out there and start shopping it because I am not a broker dealer and my Series 7 license has expired years ago. Like I said, this is for informational purposes only. We can help you with consulting to be able to form structure, all that type of stuff. If you wanted us to actually help you with a capital raise that would require us to go raise money for you, I'd have to then, become a Series 7 or whatever the series is now after Dodd-Frank, or they change the regulations all the time. And then I probably have to align with a broker dealer. And then, yeah, I could, it depends on what you mean by help you build capital. So it is about 7 before the hour. My hair is still quite long. I'm going to take care of that in 2022. So I wanted to just remind everybody, and I wanted to thank everybody for coming. And you can catch us this summer. We are going to be going on tour. Trade show tours next is going to be in June. We're going to be in Chicago at the Cannabis Industrial Marketplace for the Emerging Cannabis Areas Expos. After Chicago, we will be in Michigan on July 13th. I will be in Seattle. And so if you are a Washington State operator, holler at me July 15th through July 20th. I will then be in the tri-state, which is the New York area, New York, Pennsylvania, Philly, and also Jersey on August 24th through the 26th for the tri-state show. And then we are going to Cincinnati for the Ohio, which is going to be hot. They're going to have a round of licenses in Kentucky. Sorry, Kentucky, you should really get with the times. Expo on September 9th. And then we are going to go to Humboldt County and the Bay Area, October 15th through the 20th. And then finally, we'll be in Missouri in November. So come see us at that. And if you also want, go ahead and go over to cannabisindustrylawyer.com, sign up for our newsletter, email me at tom@collateralbase.com, and check out our YouTube channel, Cannabis Legalization News. Thanks, everybody. I hope that you all have wonderful days. And I am going to stop the share, and I'm also going to end this, but I will see you soon. And if you have any questions, hit me up and I'll talk to you when I talk to you. Have a good one, guys.